Today I want to talk about something that honestly I think a lot of people still don't fully understand, and that's the phase Bitcoin is currently in. Because if you just look at the price on the surface, it feels like nothing is happening. The market looks boring, sideways, without a clear direction. Instead, we're going to focus on market structure, market psychology, and how institutions typically behave when they're preparing for major moves. So if you want to understand what might really be happening behind the current price action, stay until the end of the video, because we're going to go step by step so everything makes perfect sense. Right now, there's a very common feeling among investors: uncertainty. Some people think the market is exhausted, others believe we are about to take off, and many are simply confused because the price moves up a little, then down a little, without ever making a clear decision. In fact, historically, the opposite tends to happen. The more sideways and uncomfortable the market feels, the more strategic activity is usually happening behind the scenes. It's almost as if the market is testing everyone's patience. One of the most important elements right now is a specific price zone that has proven to be extremely significant. They accumulate slowly, patiently, trying not to move the market too much while building positions. So when price drops and is quickly absorbed by strong buying pressure, what we're often seeing is institutional absorption. There's another detail that reinforces this idea even further. The Bitcoin spot market still shows no clear signs of selling. Investors buying without leverage are holding their positions, and in this type of environment, that's usually a very meaningful signal. Because this is when something invisible happens, a transfer of positions. Impatient investors sell, while patient investors buy, and that process takes time. If price moves straight up, institutions wouldn't be able to accumulate large amounts without pushing the market too quickly. That's why they need sideways movement, false breakouts, and moments of doubt. They're not looking for fast moves. They're building strong positions. In fact, the recent move toward the 70,000 area in Bitcoin has had an important effect that many people are overlooking. And niche-related open interest has already been liquidated during this move. In other words, the excess leverage positions that had built up in the market have largely been cleared out, and this fits perfectly with sideways phases. While price appears inactive on the surface, the market is internally restructuring itself. Not always, but it happens surprisingly often. Another important signal is high volume that fails to push price lower. That usually indicates something very specific. Buyers are absorbing selling pressure. It's like trying to push against a wall that doesn't move. That doesn't necessarily mean price will rise immediately, but it does show strong interest in defending certain levels. And when that defense repeats multiple times, a solid base begins to form. If we combine this with everything mentioned before, a spot market that isn't selling in reduced open interest, the interpretation changes significantly. We're not looking at an overheated speculative market, but one that is gradually stabilizing. Something I want to make very clear is that markets rarely move in straight lines. The strongest moves often come after multiple false signals, fake breakouts, sudden drops that create fear, followed by equally fast recoveries. This isn't manipulation in a conspiratorial sense. It's simply liquidity dynamics. The market needs to shake out less patient participants before it can move decisively. That's why we often see volatility right before major moves. Looking at the current structure, the most likely scenario doesn't seem to be an immediate explosive move, but rather progressive consolidation, a market advancing slowly, with small pullbacks while gradually building support. And that's usually healthier than a vertical rally because it makes the move more sustainable. And that's usually, we may continue to see oscillations within the current range while the market decides its next direction or objective. Yes, it can feel boring, but very often boredom is exactly what precedes larger moves. After an open interest reset like the one we've recently seen, markets typically need time to rebuild positions, which fits perfectly with this consolidation scenario. The biggest mistake I see right now is trying to predict every small Bitcoin move. To summarize everything, Bitcoin doesn't look stuck, and it doesn't look weak either. Instead, it feels like a transition phase, the period where the market is reorganizing its structure before the next major move. If you enjoyed the video, leave a like, subscribe if you haven't already, and let me know your opinion in the comments. These are uncertain times, complicated moments. I hope you're all doing well. Stay sharp, stay calm. See you next time.